Okay, so a quick revision of the Googl trade. Earlier, we were buying 1005 strike puts of Googl that expired tomorrow. We were buying them at a price of roughly $10.50. By the end of the day, unfortunately, they did not move significantly in our favor. Now, I will demonstrate that at one point they were trading at this level when Googl almost breached this level of 1001, and these options were worth 1550 roughly, so you would have making a profit of 1500. Going into the close, Googl showed some resiliency, and towards the very end it did sell off. Please pay attention to this volume right here going right into the close, okay? Because at the point, of course, you could have closed your position here and kept your $1,500, which on a $3,300 investment, that would have been not that bad. Not great, but it would have been okay. Now, after that, of course, you could have freaked out right here, and if you did close your position here, you would have had a loss. As you can see, we're patient for the rest of the day, and at this point, we're breaking even. So at this point, going right there into the very end of the closing, right before the bell rings, okay, you have to make a decision. Do you want to keep these options till tomorrow because they are expiring tomorrow? Or do you want to close them out, not take any chances on tomorrow, and maybe buy some put options tomorrow based off knowing exactly what the market is doing, and maybe extend your put option through the following week, okay? So what are the signs that I'm looking at in making this observation? Again, the whole day, right, as Googl was trying to go higher, I've been paying attention to the accumulation and distribution. Well, it was flat. It did not move at all. However, going into the close, I'm observing some very significant volume going right into the close. Huge sell order comes in. Look at this accumulation distribution. Looks like somebody sold a bunch of shares right before the market was closing. So I will take this as a definite bearish signal going into tomorrow. Also, I wouldn't just be basing my decision off that, okay? I would be going and checking out some other graphs, okay? Here's what we've got here is a chart of Googl on daily time interval where we are observing the following thing. We're observing an increase in volume, although it doesn't look like they were selling it today, right? Let me just flip the chart here again, okay? It doesn't really look like they were selling it. Right? It looks like, let me put maybe a 5-minute chart here. So it looks like, right, it sold off in the morning, then it went severely higher, and then it sort of decided to start trending sideways, okay? Well, interestingly to know that both volumes, look, the volume was very high in the morning when it was falling, and going into the close, we had a huge increase in volume at the same time as the stock was falling. So as it appears that the stock was not moving, or actually was at some point it was showing plus $6, $7, $10 higher for the day. Look what actually was happening. Every time the volume increased when the stock was falling, not rising. That is a bearish sign. Okay, so going back to this chart right here, what do we have? Look, an increase in volume. It looks like the stock was not really selling off. It looks like it was trending sideways or going higher. But if you observe the volume right here, we're clearly seeing that it was selling off. However, we couldn't have observed that if we were just paying attention to the price action. Okay. Now, interestingly to know, all the other bearish signs are still in play. That would be some other additional reasons to keep my position through tomorrow. I don't see any spike, of course, in the accumulation distribution, as it was pointed out through watching the 1-minute chart throughout the day. It was completely flat, and it actually took a dive going right into the close. And this is exactly what we're observing here. It did not go higher. The RSI, there's no apparent momentum. The stock is having a really hard time going higher. Every time, as you can see from the chart here, every time it tried to make a move higher, let me point this out again on this 1-minute graph. Every time it tried to make a move higher, see right here, somebody came in and they sold some share. Another attempt to go higher, sell off. Another attempt to go higher, selling off. Attempt to go higher, selling off. So every time it does this, okay, This is one top. This is another top for the day. This is another top. So now we got three tops. The chances of the stock breaking out after the third, second, once it gets to the fourth top for the day, the probability of it going lower are much more significant. And that's exactly probably this person right here who sold a bunch of shares at the very end. They were waiting to see if the market was going to go close higher and if Google was actually going to make an attempt to break out of this sideways trading for the day, but it didn't. And so their ultimate decision was probably to just sell off and not take chances of what could happen tomorrow and what could happen as a result of the long weekend, Friday, Saturday, Sunday. They did not want to take chances. They did not want to wait till tomorrow, so they got out of their position. That's what we're observing here. Now, if we go back to this chart, the key thing here that I'm observing as well is Google actually closed 3 days in a row. It's been trading under this orange line, which the significance of that is your 200-day moving average. And so it actually had a chance to escape out of these curse, if you will, out of these bear curse, but it couldn't. It certainly tried, but it couldn't escape it. So we're noticing to where it's actually pretty steadily now trading for a few days in a row under the 200-day moving average, which is a bearish sign. So observing all of these factors and the fact that the position we've got is a 1005 strike put going into tomorrow, the situation looks pretty good. Okay, so what could we expect? Could Google retest the level that it has set earlier in the morning, which was $984? Yes, and if it does retest that level tomorrow, how do we calculate how much this option is going to be worth? Let's take a closer look here. All right, so what is this option going to be worth tomorrow? So again, if it falls from this range to retest this level of 994, sometimes they don't retest it, or sometimes they go right through these levels. Okay, so a lot of times I would actually set a closing order just above this price level, just in case it doesn't quite hit the same target from prior day. So what I'd be looking at is a possible move lower at the open to where Google would reach potentially maybe 990, between 984 and 990. So depending on how the situation looked in the morning and how aggressive was the selling, or if maybe the market continued trading sideways, I may be making my decision of where I would be closing this situation out. So I would typically set a set to close order between 984 and 990. Let's say in this case would be 985. So if it was to repeat what it did this morning, sell off in the morning, my order would be closed at 985, and that position would be worth, it would be $20 in the money. So you would be getting, for every put option that you would have acquired today, you would be getting twice your money. So, not huge gain, but it's, again, we're doing this, within a matter of 24 hours. So you would have invested $3,300. If it does go to 985 tomorrow, you would be getting $6,600 back for a total profit of $3,300. If you have any questions on how to do this, if you want to learn more on what to pay attention to, if you'd like to be a day trader, if you'd like to be a swing trader, if you're an experienced trader, if you are an investor, some of these rules and principles, even though I'm showing them to you right now on daily graphs, and I'm implementing some pretty much daily trading strategies in some of my examples, a lot of the graphs, a lot of the patterns, a lot of the strategy behind it could easily be applicable to different time frames. So if you're interested in learning more, okay, visit marketcrash.money. Visit marketcrash.money. Read some information about why stock market crash 2018 could be a definite possibility, why Bitcoin crash could be a possibility still, and how to profit from trading options, trading monthly options, trading yearly options, and longer-term strategies of over 2 years ahead in time, which of course minimizes your risk significantly and gives you a much higher reward than just trading stocks. Also, for some of you that may be individual investors out there, okay, because I work with traders that got, huge account, a few $1 million, and I work with traders that are just starting out with $1,000, $2,000 bucks, okay? it's not the size of the account that matters, but rather than what type of percentage returns that you're able to show on your trades, because the principles behind the trades are the same. So you could start with a lower amount, and typically you wouldn't have access to stocks like Google, right? I mean, if you got $1,000, what, you're going to buy one share and wait for it to go up $50 down or $50? So typically what individual investors do, they have a tendency to go for these cheaper stocks. Well, cheaper stocks, they're a lot riskier. That's why they're cheap, okay? And with options, you're actually able, with $1,000, $2,000, to be able to get some of the action of the institutional investors. And since they're the ones that are moving the markets, if you can participate on their sell-off, when they're selling thousands, millions of shares, that makes your position so much less riskier than trading some of these $3, $4, $5 stocks, okay? And your returns so much higher. So with options, you're able to level the play field with the institutional investors. And you're able to control, with just $1,000 investment, you're able to control 100 shares of Google for every option that you trade. Now, with just buying or selling a stock, you would never be able to do that with just $1,000. You'd be able to only control one share. So if you're wanting to know how does this work, how do you get these crazy returns of 400%, 500%, 1,000%, 1,500%? Okay, click right here, How to Profit. Schedule your consultation. As a part of the consultation, I will share with you my personal record where I take $12,000, turn it into $466,000 in one trading day. That's right, in less than 7 hours, 6 hours and 47 minutes. If you'd like to learn the principles that I am using, the principles that I have applied in order to set that record, if you'd like to know the secret recipes that go behind the scenes, okay, definitely schedule a consultation. I would be more than happy to share it with you, okay? And have you learned more about this exciting world of options? Thanks for tuning in. Thanks for watching, and I'll catch you in the next video. Thanks.